Hello guys. I think we should add US30 on our basket because remember here we're focusing mainly on Nasdaq, volatility 75. Sometimes we do gold. I think we should add the Dow Jones or the US30, which is sort of related to US100 on Nasdaq. I already made a video on this one. So US30 is just a summary, a stock of 30 biggest, I think, tech companies in the US, and then Nasdaq will be 100 top 100. So that's why they are related. So if you check this structure on US30 and compare to the structure that you have on Nasdaq, you will find that they are sort of making similar moves. So we are just gonna analyze this one and see where it is headed and if we can get any trading opportunities. So let's start with highest time frames and see what's happening there. Okay, on monthly, the nearest area of support is here, of which I think it was hit. Let's just see. Let's put a horizontal line and just check if it was hit or just missed by a small margin. Just missed. But we can see we're sort of reacting from it, the monthly area of demand, and then we formed a pin bar here, but we haven't yet went above it. So if we were to mark the area above and the area below, we would say support on monthly, resistance, we're just in between, and that's it. Let's go on weekly. Still the same structure we are having on Nasdaq, which is this, opposing is this, and that's it. We had engulfing here, keep that in mind. And let's go down to daily. On daily, we were going up nicely after breaking the trend line, so this will always remain the area of support that broke the trend line and broke the resistance, but we failed to touch that. Something could say, now I'm putting my zone here other than where I put it myself. So if you put it here, it's also fine. It means you have reached your destination because you have hit that level. Like if you use this candlestick here, it means you have reached your destination because you did hit that. But for me, it wasn't hit, and it's coming down now. There's nothing much on this time frame. Besides that, we do have nice zone there, which is the price is still quite far. And now on H4, we were moving up, and then the last support that we had before the trend line was broken was this one, and this is the sort of the area that did what, that broke, that did this move and broke what, the trend line, right? Which means it's a nice area. Price went to it, it bounced, and then we were sort of just moving in between these two. H4 was in consolidation for a while, but remember, the more a level is hit, the weaker it gets, and both of them were being hit but if you were to compare, you can see that they moved the upside. They were not really reaching that. So they're sort of, let's just put a horizontal line so that you can see what I'm talking about. Horizontal line. Yes, that's where we place our line. So we put it using this zone. You can see that we touched it. Okay, this here, and then this is the perfect touch. But we were sort of in the general trend, we're sort of doing like this, dropping. On this side, we're touching. So you can see that the bulls, when they're approaching that area of resistance, they don't have too much power. Their strength is just reduced. They don't manage to push it until the exact level. They just push, and then out of power, the price turns. Push, out of power, the price turns. Push, out of power, the price turns. So we can see that as much as we're moving in between this consolidating, but the bulls are seems to be weaker than the bears. That's why the bears, when they're pushing down from the area of resistance, they manage to go all the way to the area of support. But the bulls, when they're going up, they just end halfway. So you can see the trend to the upside is dying out, which means the bears have a higher potential of what? Of breaking the support more than the thing. The bulls can break the resistance. And you can see it did hold for a couple of times, and then now it has been broken, which means our next area on H4 is here. Those ones who are trading H4, from H4, this is your area. When you get there, you can look for buying opportunities. But remember, we don't just go in just because because our bullish trend line has been broken on this time frame. We can't go and place buy limit. Why? Because we are not bullish on this time frame, but because of the sequence, or this being the highest time frame on the time on the combination that you are using, you are forced to search for trades when every time the price hits the highest the levels on your highest time frame, basically. But you can't put buy limit. Limit is prohibited because we are not holding in terms of the trend line. And this is the opposing resistance, support. So you'll be looking to buy from this, sell from that. If you're trading H4, buy, sell until one of them is broken. That's how you do it. But if you're trading higher time frames like daily, where that guy is going to be entering, you don't have a trade. You're sort of waiting there to trade the whole thing. So that's why I'm saying those who are trading smaller combinations, they will be having more trade setups than those who are trading higher time frames. So that's why even someone who's trading, someone can say, I'm only doing H1 and M50, which means they are going to have a lot. They're going to execute many times throughout the day. But if you're trading H4, you won't get that opportunity. You won't get those opportunities to trade all the time. You see? So for now, the bears are just in control. They can push the price to at least that H4 level, this one. Then someone can start to look for buying opportunities there. But for us, we just wish it goes all the way down. We get the discount, and then we're going to trade the whole thing. The whole thing. This was a nice move. But yeah, that's it. That's it. You can see that this looks like Nasdaq. It looks like Nasdaq. So for now, mark this on your chart. Remove this. So once a level is taken out, you ask yourself this is support, right? A support can only be broken by what? By resistance, a move from resistance. A support can't break support. So once a support is broken, you need to ask yourself, which resistance broke this support? Then you come to conclude that, it's this one. Therefore, it means where you had drawn your support, because it's not there anymore, it doesn't exist, it has been broken, you shift it to the resistance that broke it. Then your chart would look like this, and you just mark the zone below. You don't need to have like a lots of stuff on your chart. Just need the ones that are going to help you in searching for trades. Things like this, we don't need them anymore, because of what? We knew that it was broken by what? The level that we marked there at the top. This, the one that moved down and broke it. So once we mark that level, we are done. We don't need the trend line anymore. You can remove it from your chart. Even this one, you don't need it. Your chart must be clean. So if you want to put a trend line on this time frame, it will just pass like that. And because we broke this support, and we said if you're trading H4 as your highest time frame, this is your resistance, this is your support. If the price goes there, you're more than welcome to sell and say maybe it will come to this one. Or if it comes here, you're more than welcome to search for buying opportunities and target the trend line there. That's how you should trade. So we will start to monitor this one as well, because it's related to Nasdaq. That's why I do not like it. I can't trade two things that move the same, make similar moves, because it means if I lose double. So why must I not risk on one and just increase the size if I have to, other than trading the same thing double? So that's why you shouldn't trade. Even if you're trading currencies, you shouldn't trade the currency pairs that are correlating. You will find people saying today is the NFP. So they'll be, if they're saying the dollar is gonna be strong, you see someone buying USD CAD and USD ZAR and USD, everything USD, they are buying it. But now it means if they get it wrong, if the USD becomes strong, it becomes weak, they are going to lose all of that. So why not just pick one and just trade it, because they are making the similar moves. So if, let's say for instance, USD30 and USD100, and you are planning on executing on a USD30 and USD100 at the same time, why not pick, maybe let's say USD100 and use double the size, and use this. If you're using the minimum, use this, so that it's easier for you to just open that chart and monitor it, other than trying to shift from this chart to that chart, just so that you monitor both of them, but they are making more or less similar moves. So just pick one and stick to that. That's why this one I don't trade it a lot, but I can just add it to the thing so that we just use it to analyze. But our biggest guide is what, this is the one that we are addicted to. This is the one that we're going to be trading most of the time, because it moves more or less the same as this one. So let's just pick one and stick to it. Is this, but this we can use it just to analyze and maybe just for learning purposes, and then that's it. All right, I'll see you on the next one. So hopefully it will come to at least this, so that those guys that are trading from H4, they will have opportunities. But I just wish it bends all of them so that it comes down, so that we can all get chances to enter. All right, guys, I'll see you on the next one. Sharp, sharp.